Hello Sector Watchers, welcome to the show. This is the 56th episode of Sector Spotlight, Tuesday the 17th of November, recorded on the 16th. My name is Julius the Kempenaer and I'm your host for today's show. Pretty big moves in both asset classes and sectors, as we will see in the overview, where we will discuss last week's performances and rotations. After that, I'll be picking a few interesting charts from asset classes and sectors to discuss from a slightly longer term point of view. After the break, we'll be discussing the growth value rotation. It seems to be the talk of the town lately, and as a matter of fact, I myself am guilty of that as well. As a matter of fact, we even have both IVE, the value ETF, and IVW, the growth ETF, as suggestions in the long-short basket since the 8th of September. Long IVE and short IVW, that is. Today we're going to take a look under the hood of that rotation. And if you'd like to get in touch, please go ahead. My mailbox is open, and also the comment section below articles and videos is a very good place to share your thoughts. So, what happened last week? We have the two RRGs, the two relative rotation graphs for asset classes and sectors on the screen here. If we start on the left hand side, by the way, you can see that there are people who watch the show more regular will probably immediately catch the fact that these tails are relatively long to what we're used to, and that means that we had a big week in terms of movement, in terms of relative movement. If we start on the left hand side, then we see that the benchmark, our benchmark, the Vanguard Balanced Index Fund, gained 1.3%, but the real estate asset class, represented by V and Q, gained 6.9%, and we had the GSCI commodity ETF gaining 3.5%. And then we have ITOT, the US stock market, total US stock market, with 2.3%. Then Bloomberg Commodity Index 1.4, and then below the Balanced Index Fund we have the US dollar, we have high yield bonds, we have treasuries, and we have investment grade corporate bonds. Looking at this RRG here, there is a very clear directional move visible positively for the risk assets, real estate and stocks, who are now both pushing into the leading quadrant on relatively long tails. That indicates that there is good momentum behind those moves. And the opposite goes for pretty much all fixed income related asset classes, and the Bloomberg Commodity Index, DJP also, and a little bit less so with the GSCI Commodity Index funds. They're all on the left hand side, they're all inside lagging, so they're not really good. And I think this rotation shows the return to risk assets, where we had a few weeks of maybe doubt, confusion, whatever you want to call it. But it looks as if the market now has decided that it is time to really get back into risk assets, with ITOT and real estate pushing into that leading quadrant. We'll have a look later on the longer term charts, how that all fits in with the longer term picture. If we move over to the right hand side of the screen, we see the RRG for US sectors. And again, some sectors with pretty long tails. And if you look on the table, it's interesting, you see that the top performing sector of last week was energy with 17.1%. It's a massive gain. And on the opposite side, we had technology losing 30 basis points. So basically what this means, that if on Monday morning, or maybe even Friday prior, on Friday the 6th, you bought energy and you sold technology, that spread would now have gained 17.4%, 17.1 positive for energy, plus the 30 basis points negative for stocks. So That's a massive diversion between the performances of those sectors. And so I think it makes sense to look at the sector rotation that's ongoing. That's what we do here every week. And I think that this week is a prime example of how this plays out and how big these differences between the individual performances of the sectors can be. And if you look at the S&P 500, it gained only 2.3%, but the differences in the individual sectors are massive. As I said, energy on top of the list, and then with less than half of that performance, but still 8.3%, financials seems to be waking up, doing very well. Industrials is one of our favorites for a long time already, did very well last week, 5.4. Here also real estate popping up as positive, not as good as compared to the balanced index fund. That's pretty clear because stocks itself did very well. But we see real estate inside improving, slowly moving towards leading. Again, we'll have a look at that, how that fits into the longer term picture in a moment. And then we had a pretty good week on staples, although the sector is inside the lagging quadrant. And again, this is a pretty good example. I get a lot of questions from people saying, so if something is inside the lagging quadrant, it is underperforming the benchmark. Or on the other hand, if something is inside the leading quadrant, it is outperforming the benchmark. Well, not necessarily every day or every week or every string of days or string of weeks. What this means is, or what RRG does, it is measuring trends in relative strength. And I've said it multiple times before, and I'll do it again. Trends don't move in straight lines. So if you see a security, a sector, whatever, let's say inside the lagging quadrant, it does not necessarily mean that that sector over that period lost versus the S&P 500. And as I said, staples is a pretty good example. It's inside the lagging quadrant, but it outperformed the S&P 500 over the last 5 days. The longer term picture for staples is a lot less positive. So that's why, that longer term trend on the daily scale is still negative. That's why staples are showing up inside the lagging quadrant. Utilities rotating back. They had a very good stint. They're way on the outside. They're now moving back towards lagging, or at least so it seems. And then we have healthcare. That is the opposite of staples, which is it's inside the leading quadrant, and also materials inside the leading quadrant. But for the last 5 days or last week, they've been underperforming SPY. But these relative trends are still good. Not backed by as much of momentum, but the trend is still good. That's why they show up inside the leading quadrant. Communication services continue to rotate into the lagging quadrant, out of leading. And we have discretionary now fully inside the lagging quadrant. And then we have technology way to the left. Technology is going through a rough patch, as we've seen over the last few weeks. It hicked up a little bit, but look at the difference in tail length for technology versus, for example, energy or financials or even industrials. I mean, these are tails that have power behind it. So XLK technology just inside the improving quadrant. That's why the tail turned blue. As long as the tail is inside, or as the last point is inside lagging, the tail will be red. And then as soon as it jumps into the improving quadrant, the whole tail will turn blue. So you can tell by the color of the tail in which quadrant it is right now. Short tails tell you that it is a stable, in this case, downtrend. Not much going on there other than that technology is now underperforming SPY on the daily RRG. Let's quickly go through a couple of charts, because after the break I will dive into an interesting subject on the growth value rotation that a lot of people are talking about. But we'll do that after the break. Let's quickly bring up some charts here. Let's start with ITOT, and of course, I bring up the wrong one. I need this one with my annotations. And we highlight ITOT, and let's make this a weekly RRG. That's a little bit more like the, the weekly show, weekly time frame that we're looking at. And you may remember that ITOT was on the right-hand side. It dropped into weakening. And as you can see, for the last week, we had this little hick. This is only, you see how small that move in ITOT is, and that is the momentum picking up, and that's why you saw that on the daily tail, such a nice move moving into leading, and on the weekly that translates in an almost status quo for the last two observations, and it's about to turn back up inside the weakening quadrant, and that's something that we've discussed a few times before, that ITOT, although it was losing relative momentum, was still far enough to the right hand side to give it enough room to actually curl back up inside the weakening quadrant back to leading, and it looks as if that process has now started. And you see the same, with GOVT and HYG, and so the distances between these last two observations are really short, and GOVT and HYG are already hooking over, just like ITOT started to curl back up. If we go to the chart of ITOT, that's very interesting. You see that it managed to break to new highs out of this consolidation, which obviously is a strong sign. But from a relative point of view, and versus the VBINX benchmark, what I really like is the fact that it looks as if we're pushing to new highs, and that is a good thing. Now, mind you, this chart, I'm recording this after the US close, so this chart is already updated. And this last observation here, pushing above that new high, is because of today's price action, pushing it further up. But if this happens to hold up until Friday's close, that is something to keep an eye on, because it's a pretty strong sign for the US stock market as a whole. Let's have a quick look at the I said VNQ. That was an interesting chart to keep a look at, because it was one of the tails, remind that was pushing into the leading quadrant. But if you look at the price chart, it's a completely different chart than ITOT. Real estate still has trouble breaking to new highs. We're struggling around this 86, 85, 86 area. Relative strength is holding up above previous lows. But we do need to bounce off this to give it a little bit more body, a little bit more strength, and a clear break above this barrier here would really help the real estate sector, but we're not there yet. Another chart that I want to show you is on asset class at least, is the one of government bonds, because what you see here, and this is what we've been talking about for a few weeks now, that it looks as if this double top was putting into place, and we're now getting really, really close to a completion. The low of this pattern here, we need to go look at this, is 27.45. So it is weekly, so a weekly close below 27.45. I like to give it a little bit more, like 27.40, maybe 27.35, but anything significantly below this previous low would be a very negative sign, and a completion of a double top for government bonds. That will very likely push the relative strength below its previous lows, and as you can see, this one is also updated through today, and it's just about to peak below these previous lows, and this is also something that I gotta keep an eye on, because when this happens, we got a double whammy. We got government bonds breaking lower, pushing yields higher. We got stocks breaking higher, so the spread is going to widen. And that's, a few weeks ago I wrote an article about an explosive moves in the stock bond ratio, and it looks as if we're getting closer and closer to that moment. Now let's quickly move to the RRG for US sectors and pick a few interesting tails to keep an eye on there. Here's the weekly the weekly chart. And of course, energy with its 17%, we need to take a look at, and that is right here. And this is a chart that we looked at a lot of times. We talked about it last week because it gapped away and it broke away. Clearly that steep downtrend has now been broken. This is a first higher low, which is all good. On the relative, I am not all that confident because we're still below its previous low here. And we got to see how this materializes. It's obviously, because it was such a long downtrend, it takes a lot of price and relative action to bring it back up. We have energy in the long short portfolio still as a short position. As a matter of fact, it's one of the better performing short positions. Obviously not last week. We got hit there. And I am very likely to publish, I'm going to write that up, publish an article on reviewing some of the positions, and I'm leaning towards taking the profits on that short position in energy, just because we can, and this chart is starting to look better, and you just don't want to give away everything that you gained. If we look at industrials, that one is still doing pretty good, and that's one of our seasonal calls. Very nicely holding up there. In terms of relative, we had a little bit of a sideways move. That's translated on the RRG with a little bit of loss of momentum. But I'm actually expecting this to either make the rotation here or not even make the rotation, but just curl back up, because this is actually pretty strong and it's holding up there, and now we're also pushing further at the start of this week. Second one of our seasonals is materials, and we see that improving. We had after the break we had a sort of sideways move in relative terms, almost pushing it into the weakening quadrant. But look at the short tail. That short tail, if there are short tails and it's far to the right, I'm not too worried, because it simply means that this trend is steadily moving higher. Not a lot of power behind it. I look at the shortness of the tail, but steadily moving higher. And then I dive into the relative strength chart and I see that it is still above its previous resistance, now acting as support. So that's all pretty good and comfortable. Less so with the technology. It continues to move towards the lagging quadrant. And if we look at the chart itself, XLK, then we see that it continues to struggle with that overhead resistance just below 125. We now have 3 touch points there, with the high of last week. This short bar here is today, and the rollover in that relative strength is becoming more and more clear, and we're now starting to drop below previous lows. So it looks as if technology needs a little bit more time to recover and go through a negative rotation. Will it hit the lagging quadrant? I'm not sure, but I don't really like the fact that it's not been able to push higher yet, and I don't like the fact that the relative strength line has broken its rising support line. So for the time being, technology is not one of our favorite sectors, although there are inside the technology sector a couple of very interesting stocks, and I'm planning to write on that tomorrow and do a few picks for the long short portfolio. Finally, let's look at the financials sector. You see that it is continuing to move to the right, and we had this massive gap up, and it looks as if this price is now coming into this resistance area. The relative strength is definitely improving, but we need a little bit more momentum. We really need to bounce off that support level. The price chart looks to be helpful. When that happens and we cross over into the leading quadrant, then financials could be an interesting sector to start building up positions in it. Want to leave it at that for now with regard to asset classes and sectors. We're going to a quick break, and after that we'll take a look at the growth value rotation a lot of people are talking about lately, and we're going to take a look under the hood of that rotation. Stay tuned, we'll be back in 30 seconds. value rotation. There's more to it than meets the eye. And today in Sector Spotlight, I actually wanna get under the hood of that rotation and dive a little bit deeper and see what's going on in that. It all starts with the rotation of growth, the plain vanilla rotation of growth versus value. And we can see that if we open up the RRG page on StockCharts.com and go to the, in the drop down there is a section US markets, and it has a growth value universe. And the universe is only two indexes, US value, US growth. And if you look at these tails, then you can see that they're moving in opposite directions, and lately it's in favor of value because it's at a positive RRG heading, and growth is at a negative RRG heading. If we put this tail to 30 weeks, maximum that we can do here, you'll see the clear opposite rotation in favor of value. If you look at the table for the percentage gain, then over this 30-week period, it's still growth that's beating value, 37 versus 21. Now, what's interesting to do is if you shorten the tail by dragging the slider, then a little bit over halfway. So if we go here, you see that now it's still growth that is leading or gaining in the table I'm talking about. And we're 19, 18, 15. So now you see that value is starting to beat growth. So from week 15 onwards, you see that value is beating growth, and that becomes stronger and stronger and stronger until like now it's really there. So this clearly shows that growth value rotation, money is rotating out of growth into value. And we can certainly see that when we move to the plain vanilla chart. So here is the growth chart, where you can see that it has trouble breaking to new highs, and you can see that the relative line is moving over. And beware, I'm now using dollar index DJUS as the benchmark to match what we see on the RRG here. The other one is the value chart, so that's VA, and there you will see the opposite. It broke out. It's not at all-time highs yet, but it broke out of its consolidation, and here you see the relative strength turning around in favor of value. So this particular rotation, value, all market, is beating growth now, and it looks to continue that. However, on the RRG, if you go into the drop down, there's also a breakdown into sizes. And here you see the breakdown of large cap, mid cap, and small cap. And over the last 5 weeks, you see a rapid acceleration out of large caps into small caps and mid caps. And that's interesting. I noticed that. And then there is a third universe on the drop down, and that's where it becomes really interesting, because here we combine growth, value, and size. So this RRG, let's talk about what we're looking at here. This pretty much looks at a matrix. So we have growth and value, and we have small caps, mid caps, and large caps. And these indexes on the chart represent every part of that matrix. So let me tick off DJUS because that was the benchmark. We don't need that on the chart. But we have small cap growth, mid cap growth, small caps as a whole, mid caps as a whole. The benchmark is the Dow Jones US index. Then we got large cap value, we got US value as a whole, we got small cap value. So we got all 11 members of that matrix actually on one chart. And what caught my eye is that when you look at this chart, there's only 3 tails that move at a negative heading. and they're US large cap growth, US growth, and US large cap. All others, value, but also the growth stuff, is moving at a positive RRG heading, suggesting that there is a relative uptrend versus the benchmark. Now that's interesting, because what this means is that pretty much the whole stock market, growth and value segments, are either in a relative uptrend versus the market or rapidly getting there, except for large caps, and more specifically large cap growth. And I think that's an interesting piece of information, because we're talking about a rotation out of growth into value. But if you look at the tails in the green, they are small cap growth, mid cap growth. This is the small cap index as such, and this is the mid cap index as such. So the strongest indexes, the strongest segments of this whole universe are US small cap growth and US mid cap growth. And if we put those on a chart and we go to DJ US GS, then you see what I'm talking about. This is breaking to new highs. We're breaking out of this consolidation on the relative strength chart. RRG lines are rotating back. Look at this rotation. It came from leading through weakening back into leading. So it's actually probably the strongest segment of the market, small cap growth, not value, small cap growth. So market as a whole moves from growth to value, but more specifically, market is moving from large cap growth into small cap growth and mid cap growth, and a lot less into value, whether that's mid cap value, value as a whole, small cap value, or large cap value. They're all gaining, but not as good as small cap growth and mid cap growth. And I think that was a very interesting segment to show you. So read the article, go look at the chart here on the RRG and take a look at it. This is probably an underrated universe. I also should look more at it, because it gives you pretty good clues about what's happening under the hood of that rotation. I'm sorry, this was Sector Spotlight again for today. Thank you for watching. If you liked the video, please let us know by clicking the thumbs up icon. If you have any questions or remarks, please use the comment section below, where you will also find my responses. So don't be shy, I won't bite. If you prefer to respond privately, my email box is open. And rest assured that I do read every mail and I will answer, although it may not be the next day. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern and replays on the StockCharts YouTube channel. Please stay safe, and I hope to see you again next week for a new episode of Sector Spotlight.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.